Yo, good morning. It's Sam here. We have an awesome show lined up for you today. We've got You Will Own Nothing and Be Happy, the 2030 Agenda, right? By Klaus Schwab and the New World Order, right? So we have a dialogue around that. We have a little video we're going to actually get into to talk about that. Hope everybody in the chat is doing amazing. We have Coinbase is joining. Basically, they're paying for all the legal expenses to sue the government for Tornado Cash sanctions. Interesting news there. You guys know who, Sam Beckman is? Sam Beckman Friedman, the guy for FTX that started FTX. Well, he's kind of like a CZ type of fellow. He's been in the industry for a very, very long time. FTX is big. And we got some feedback from him around the merge and what's actually going to take place. Also, more confirmation from him that there will be a fork. So you have a high likelihood of getting a copy of all your hacks on the fork. How much is that shit going to be worth? I don't know. But there's already a bridge out there. There's already a testnet out there. Exchanges have already said that they will list it. So this will be super interesting. We are now also streaming on our other channel, the CIMT cast. So you guys can check that out as well. They're all going to be backed up over there. So if when YouTube decides to delete our shit, we have a backup over there. Let's say hi to the chat real quick. And we also have the SEC. SEC is setting up an office to look at crypto filings. What does that mean? Well, we have a little article there on Yahoo Finance we're going to get into. So we're going to try to keep this concise, to the point, so we can get through everything today. Junior, what's good, Junior? Little Del Hop Hex, good morning. Tara, how are you? Flat Earth, hello, good morning. AJ, hey, great to see you 3 or 4 days in a row. Freaking awesome. AZ Tro, Astro 369, hello. Checking my crypto in the morning. Caught my first Maxi token this morning. What should I do with it? Cool. Dope. I did not mint anything with Maxi or that their team of all those tokens, but hope everybody has massive success who did decide to participate in like Defi, team, base, all that stuff. Crypto Compassion, good morning. Presso dude. How are you? Antez Del Sol saying hello and enjoying another episode. You were amazing. Good morning. Larry O. Hello, Larry. Yo, small positive changes applied over time compound into geometric results derived from the words of Sam Stolt on Crypto in the Morning 9/9/2022. This is actually a true statement, and it's not just because I said it in the real life IRL. I have that saying that the aggregation of marginal gains are really exponential over time. So aggregation is just the summation. Marginal is just like that smidge more, right? So those tiny little steps and summing those all up over time yield exponential gains. Like it's not just linear. If you don't know what linear or exponential means from like a visualization standpoint, linear is just going to be like a straight line. Like you're just continually growing like this. Exponential is going to be something more like this, right? Where you start out really, really slow, like crypto adoption right now, and then you get faster and faster and faster because that's just how life is. Unsuitable, good morning. Great to see you again. RH Max, let's see if we missed anybody else. Surge, good morning. And we have Bullish in the background, guys, so make sure to give a bicep for Bullish. We're going to get into Satoshi, good morning. Par Excellence, Luna, hey, great to see you again. We're going to start out with some DeFi proof, and then we're going to get into the show. 53 people here. Before we do that, though, I want you to take a second, right? There's a share button with a little arrow down below. I think it's probably right about there, right? Let me know if I was correct. Press that share button, and even if you don't want to share it on Twitter and tag me, which you should do, but even if you just press that share button, it helps out the channel because one of the things the algorithm looks at is how many times this is getting getting shared? How many times are people actually pressing the share button? So even if you decide not to share it out, it is still helpful. If you just more helpful for you to go down and press the share button than it is the like button, right? It's actually more helpful to do that. So if you want to help out the channel, enjoy the show, make sure you do that. 420 Hex. Now we have about a minute and we're going to listen to some DeFi Proof, the official rapper this morning. Let's take it away.
You already know what time it is. Crypto in the morning. Crypto in the morning. Crypto in the morning. Waiting on phone. Crypto in the morning. 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 Waiting on phone. Crypto in the morning. Crypto in the morning. Smoking no blunt on my way to the gym. 11 a.m. I'm already tuned in. Got me some hex and I'm making a stake. Got me some hedron, I'm making it rain. Pay me some maxi and that's just in case. GymRatCrypto sent me to show you the way. Crypto in the morning, 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 crypto in the morning.
Yes, take a second to share this out according to AJ. Please do that if you find value in this show. Now, we're going to get into what is actually going on. If you have had any exposure to the internet and you're not like a diehard news person that just kind of like gulps down whatever the media is going to shove down your throat, and you don't listen to, say, a certain portion of the political side, then you've probably heard that the statement like you're going to own nothing and you're going to be happy about that and the 2030 agenda. Well, there is a interesting video by Coin Bureau. Maybe you guys have heard of this. It's a very large YouTube channel, 2-point-something million, nicely put together, where he gets into this in a little more detail and how it relates to crypto, because I think how it relates to crypto is important, because the crypto is what you can actually own, right? Having that hardware, if you use it on a phone or something else, and actually owning your crypto, right? Because they're for the people who are really dedicated to this, you could just memorize your 24 words, right? Or use MetaMask and use 12 words, right? You could memorize your 12 words and that's it. You don't, like, nobody can take that from you. You can have access to money whenever you want, assuming you own crypto. Nobody can take that from you at all. You've got those 12 words memorized. They could take literally everything else from you, but they can't take that from you. So I want to pull this video up and we're going to get into this. We might pause it throughout. I'd love to hear what you guys thought. Think about this, right? Do you believe that 2030, throughout the 2030s, right? It's already kind of happening to a great degree, that there's going to be a lot of people that own nothing and are happy about it? Let me know in the comments as we get into this video. Without further ado.
You will own nothing and be happy. This infamous prediction from the World Economic Forum is recognized by almost everyone these days, yet there are few who believe it could ever come to pass. Well, what if I told you that our ownership of things is quickly disappearing and that many of us are unknowingly embracing this new normal? Today, I'm going to tell you about a disturbing trend that's finding its way into every corner of the economy, where this trend came from, and why cryptocurrency could be the only defense. But I must give you a quick disclaimer about knowing. So please, first time we hang out, my name is Guy, and my mission is to create high-quality content that we channel and Crypto Scout. Let's see. How often do you upgrade or change your phone? Statistically speaking, your answer will be somewhere in the range of 2 to 3 years. This is consistent with the lifespan of the average phone battery, which tends to give out after a couple of years of use, even if you're taking care of your phone's battery, namely not letting it drop below 20% or go above 90%. The more you know. Now, in theory, the solution is simple. Just install a new battery when the current one gives out and enjoy your phone for another 2 to 3 years until you need to replace the battery again, and so on and so on. In practice, however, opening your phone and switching the battery is generally not easy to do and can damage the phone. This assumes you can even get your hands on a replacement battery to begin with, which isn't guaranteed. In the case of newer iPhone models, the phone will actually detect when you've replaced the battery and will give you all manner of warning messages which push you to go to the Apple Store for an extensive repair that could cost as much as a brand new phone.
Stick with him. He's got a good
Now,
point.
critics of this setup have accurately observed that the inability to independently open, modify, or repair a device that you own means that you don't actually own it, because ownership literally means the ability to do all of the above and more. These and other issues have given rise to a global movement called Right to Repair, which has managed to pressure Apple and other tech giants into making repairs more accessible, albeit to a limited degree due to the lobbying power these corporations wield. The right to repair also doesn't always fix the underlying ownership issue, and this is something that's been pointed out on many occasions by Louis Rossmann, a popular YouTuber and computer repair shop owner who has gone head-to-head with anti-repair corporate lobbyists. Now, this video was partially inspired by Louis' content, and I strongly suggest checking out his channel if you're interested in the dystopian direction that technology seems to be heading and want to know how some folks are fighting back on the policy front.
AJ, there's some interesting stuff that he gets into later on Apple and relating to the iPhone of what's actually taking place. But you guys don't have to be like, conspiracy or anything like that to understand what is going on. Like, the number of people who actually own homes is decreasing, right? There's leases for phones at this point. The surge in Uber and electric, mobility and stuff. This stuff is all growing. There's a point to this.
I'll leave a link to his channel in the description. Always fix the underlying ownership issue. Look no further than the phenomenon of manufacturers slowing down phones to force you to buy a new one. Any Android users in the crowd will know that Samsung was fined for doing exactly that in 2018. As is often the case with big tech companies, Samsung was issued a fine that amounted to a slap on the wrist compared to the profits it probably made from artificially slowing down phones, something which the company is allegedly still doing to this day. This level of control negates any aspect of ownership, and let's just hope Solana doesn't do this to its upcoming crypto phones. More about that in the description. Anyway, I digress. Now, it's not just phones either. The practice of forcing people to upgrade through some nefarious means has found its way into everything from household appliances to hospital equipment. What's crazy is that this practice has been around for almost 100 years, and it even has a name: planned obsolescence. Although planned obsolescence has its origins in the early American bicycle and automobile industries, the term was coined by an American real estate broker named Bernard London in a paper titled, quote, "Ending the Depression Through Planned Obsolescence," which he published in 1932. In the paper, Bernard said that the Great Depression made no sense because, quote, "factories, warehouses, and fields are still intact and are ready to produce in unlimited quantities, but the urge to go ahead has been paralyzed by a decline in buying power, and by extension, a decline in demand." Given this situation, Bernard proposed the following solution, quote, "I would have the government assign a lease of life to shoes and homes and machines, to all products of manufacture, mining, and agriculture when they are first created, and they would be sold and used within the term of their existence definitely known by the consumer. After the allotted time had expired, these things would be legally dead and would be controlled by the duly appointed governmental agency and destroyed if there is widespread unemployment. In other words, everything produced in the economy would be artificially made obsolete by the government at a certain date to cause the population to consume more so that the economy recovers while simultaneously providing ample employment, further fostering economic growth." Now, if you watched our video about how to prepare for the crypto bear market, you'll know that it was the Second World War that arguably ended the Great Depression, and Bernard's problematic idea of planned obsolescence never really caught on as a result. This is primarily because the post-war period was one of incredible prosperity, particularly for the United States, as it managed to reap much of the rewards of victory while incurring little in the way of losses compared with its allies. The US dollar had also just become the world's reserve currency. More importantly, the populations of countries like the United States and Canada exploded after the Second World War, creating the army of well-off old folks many of us now refer to as boomers. This is important because the rapid increase in population meant there was a rapid increase in consumption, and that meant that there was no need for planned obsolescence business practices. Companies could comfortably sell high-quality hardware that would last for decades because they knew there would always be another wave of buyers coming next year as more baby boomers became adult boomers. This seems to have been the case until the 1970s, when it became clear that baby boomers weren't having nearly the same number of children as their forebears. It appears that many Western countries tried to fill this future demographic gap by opening their doors to immigration, and this seems to have worked for a while. By the early 2000s, however, it became clear that immigration alone wasn't enough to fill the future demographic gap, which of course continued to grow as companies needed ever more future consumption to continue their future expansion. All the while, native birth rates continued to decline. This seems to be the period when Bernard's idea of planned obsolescence started to become a reality. Companies were effectively forced into selling low-quality products that would require a repurchase every few years to continue consumption trends in the absence of a growing population. Now, I know what you're thinking. Guy, this is...
What do you guys think about that? How silly is that, though, right? Why not, like, to do this for business purposes, purposely make a lower quality product just so you can get people to buy more of it, seems counterproductive. And a point that he gets into in a few minutes related to a basically eternity lease for a phone, the iPhone, right? It is, I see AJ talking about in the chat here. He actually gets into that in a minute.
This is all very interesting, but what does this have to do with me owning nothing and being happy? Well, I'm glad you asked, hypothetical impatient viewer. Any iOS users in the crowd might recall that Bloomberg reported that Apple will be rolling out a subscription service for iPhones later this year or early next year. To be clear, this upcoming subscription service is not at all like Apple's existing subscription services. That's because it applies to hardware, not software. The subscription service will be for the physical phone itself. As Louis Rossmann pointed out in his video reaction to the news, a service is when someone or something does something for you. A phone is not a service, it is a product, and it should be entirely yours from the moment you purchase it. Louis also highlighted the fact that many Wall Street investors are pushing for publicly traded companies to adopt this so-called hardware-as-a-service business model because it will make them trade at higher valuations regardless of their actual earnings, something that's mentioned in the Bloomberg article. Trading at higher valuations, regardless of actual earnings, sounds eerily similar to the ESG investment trend, which effectively consists of asset managers moving their money into companies that comply with their ever-changing criteria, causing their stocks to pump even though no actual profits are being made. While I couldn't find any concrete evidence that ESG investors are behind this accelerating trend towards hardware as a service in various sectors, it wouldn't be surprising given that the trend is inherently ESG friendly. Mm-hmm. Hardware as a service satisfies environmental criteria because the number of devices in circulation can be reduced, the devices in circulation can be reused, and any old devices can be easily recycled, as you'll likely need to give back your old device to get a newer version. Hardware as a service also satisfies social criteria because everyone will have subscription services for the same devices. There will be no phone with a better camera or a bigger memory, nor a faster or slower or bigger or smaller car, and that means everyone will be truly equal. Hardware as a service satisfies governance criteria because it will put the company producing the product in total control of its creation, use, and destruction. Anyways, more about ESG in the description. Now, unlike most other ESG-related policies, hardware as a service could actually result in actual profits because people will be paying subscription services for just about everything they own until they die. Notably, the subscription costs could be made low enough so that these products are available to more people, not just the privileged few in developing countries where most of the demand for these products is currently coming from. Whereas planned obsolescence was introduced as a means of solving the Great Depression, it looks like hardware as a service is being introduced to prevent another depression from occurring by ensuring consumption continues to increase, even as the demographic decline continues. Now, don't get me wrong, hardware as a service is unlikely to be forced upon us consumers. As we've recently seen with other products, applying too much force tends to result in an equal or greater amount of pushback because, hey, people know something is up when they...
Well, hardware as a service, I think, would probably be There's probably gonna be a lot of people who do that, right? Because think about the people who want the newest iPhone, right? That just came out, the iPhone Pro Max, 14 Pro Max, right? It's $1,200 or something. But most people live like paycheck to paycheck, and if you could pay $50 a month and you get a brand new iPhone, right? Like there's going to be a boatload of people who take that, right? You're like, okay, you pay this $50 subscription, and in a year from today, when you get a new phone, or when the new phone comes out, you can upgrade for free. You just continue paying us like a monthly subscription, right? That's I don't know how it's going to roll out, how much it's going to cost, right? Maybe it's $30 a month or something. But there's going to be a lot of people who do that, right? And we already see this happening. You know, how many subscriptions do you have? Like, I don't have Netflix, I don't have a television, I don't have cable, but I do pay for, I pay for Google storage, and I pay for Canva as software, right? And those are subscription things, right? So I don't know. It's very interesting. I'm curious to hear you guys' thoughts on this, and I'm enjoying reading your comments as we listen to this.
We don't have a choice in the matter. Instead, the ability to own anything will likely become ever more difficult as time goes on, and I suspect they'll start with the things that tend to be the most expensive purchases for the average person. At the top of this list, we have housing, whose costs have been going through the roof in most countries. As I mentioned in our recent video about the housing market, the rising costs in this corner of the economy will eventually cause the population to push politicians to do something. As we've seen in countries like Germany, one of the outcomes could be that the government starts nationalizing housing, i.e. taking it away from landlords in the name of the greater good. And while these policies will be directed...
This is already taking place in Barcelona, Spain as well. I read about this, I think maybe a year ago. Where in the city of Barcelona in Spain, they're taking landlords' properties if they're not using them, right? Like this is just a matter of time before this starts to happen, in a city near you, especially if you live in California or New York.
Towards the big fish at first, the small fish will come next, just like with taxation. Alternatively, if the housing market collapses, we could see asset managers like Blackstone swoop in and acquire as many properties as possible with the freshly printed money they received from their respective central banks. Basically, your rent from the government or from Wall Street. The next item on the list is automobiles of all kinds, and this is where lots of work is already being done by car-sharing companies like Car2Share, shared electric scooter companies like Lime, and shared bicycle companies like Mobike. You can bet your bottom dollar that these entities are extracting as much data as they can in preparation for hardware as a service models for similar automobiles. And the fact that many of these companies continue to receive large investments despite being barely profitable is evidence to this effect. On that note, hardware as a service in automobiles is likely part of why there's such a huge push for electric vehicles. That's because it's easy to break the rules of a sharing economy when the vehicle is powered by petrol and hardware, but it's much harder to break the rules when the vehicle is powered by electricity and software.
If you're not aware of this, Tesla has already said that at some point they're going to stop selling cars to the public, and they're just going to keep them for themselves. Like, why would you sell the cars to the public when it is more profitable for you to take the cars and operate a ride-sharing fleet, right? TaaS, transportation as a service. Is something that's very talked about in the Tesla community and in the automotive OEM market, right? TaaS is going to be gigantic, because think about if an Uber, say from here to 10 minutes away, cost me $15 or something like that. Well, what if that same ride was cut down by 10x and it was $1.50 to get around? You don't think that fucking everybody's gonna be like, most people are going to be like, I don't need a car anymore. I don't need to pay for insurance. I don't need to pay for this. I don't need to pay for that. Right. And it's $1.50 for me to get over there. Right. Especially with a lot more people working at home. Like, I take my car to the post office to ship shit, and to the gym, and to the grocery store, and to pick up my girlfriend. Right. That's I've got 4 places that I need to go. That's about it. There's something he says in here that I don't agree with in a second.
Moreover, there's a limit to how many electric cars can be made, because there doesn't seem to be enough lithium on the planet to replace existing cars with electric cars, according to the World Economic Forum's own research.
Lithium is like one of the most abundant elements there is. If you look at the elemental table, it is like one of the most abundant in the entire world. It's like all in the crust of the surface of the earth, all over the place. So this is that statement right there. I don't agree with at all. If you look into it more than just a cursory level.
This effectively guarantees that electric cars will need to be shared. Now, phones and computers will probably be the third class of products to get sucked into the hardware as a service scheme, but I suspect it will take quite some time for the average person to be okay with this. That's because phones and computers are frequently listed as a person's most valuable possessions, primarily because it's something that you can truly shape according to your liking. These devices also contain lots of sensitive personal data that you'd rather keep to yourself and not share with anyone. Keeping track of phones and computers would also be very difficult without a digital ID, which is also a prerequisite for the rollout of central bank digital currencies and internet censorship, which the powers that be have explicitly stated they want to see. The worst part of all this is that there are increasing numbers of people who are unironically on board with this hardware as a service idea. This is simply because an increasing number of people can't afford a home, a car, or even a nice computer or phone. I'll never forget the reaction I got when I told a few friends about how the World Economic Forum says you'll own nothing and be happy. They just sighed and said, well, I don't own anything anyway, so at least I'll be happy. If this is how you feel, take a second to consider that there is something very valuable that you own, and that is yourself. Then consider that some of the things that you do own are ultimately an extension of yourself. They allow you to be you. They allow you to exercise the...
I think par excellence this is a good point, but I think the point is exactly what they're trying to make, is what you're saying here, right? The problem with the phone analogy is that the technology has increased exponentially so that there's no need to really own old tech that becomes redundant. Yes. So there's people who have old flip phones, right? There's people like, remember the Nokia, right? The Nokia where you could play Snake on it or something. That battery would last for fucking days at a time, right? How long does it, like mine's on the charger right now, just from like 6:30 this morning. I was at 59% to now, and this is a brand new phone, right? Like the battery life just is garbage. But that's kind of the point there. If it's redundant, then instead of having old technology, right, because it changes so fast, it's more effective to just pay a subscription fee to get new technology instantaneously. As soon as it comes alive, everybody can have the iPhone, right? Kind of thing. At least that's how I see that. But great point there. Good morning, self-sufficient.
The ownership of yourself in the world. This is fundamentally why having a place to call home, having a way to move around, and having the ability to communicate and express yourself are objectively important and universally sought after. The fact that you don't have a home, a car, or even a nice computer or phone today doesn't mean that you won't have these things tomorrow. So long as the path to ownership of these and other things exists, you can find your way to them if you play your cards right, even if the system is rigged against you. Rest assured that you will never be happy in a world where the path to ownership to literally anything except your skin and bones has been blocked, because you will never be able to truly be yourself. Never mind that you might even lose the ownership of yourself because of a digital ID in such a world. So, what's the solution then? Well, by now it should be clear. The financial system we have now is not working, and some would say it hasn't been working for decades, if not longer, because it's not just hardware as a service. Planned obsolescence was proposed almost 100 years ago. As almost all of you will know, cryptocurrency was built to replace this broken financial system. And though cryptocurrency still has a very long way to go, it has already fixed one of the most important parts of finance, and that's the ability to truly own your assets. Now, you might think this is nothing new, but it really is. The money in your bank can be seized, and any physical property you have can be confiscated. Even your house can be taken from you if you don't pay your taxes, and in some countries, the government can take your property at will using eminent domain. I'm not kidding, look it up. Now, you might think that this is fine, but it's really not. These are the sorts of legal levers that governments and corporations are slowly starting to pull to take control of everything you own. Once you realize this, it makes it easy to understand why MicroStrategy CEO Michael Saylor is so obsessed with Bitcoin. BTC can't be seized because it's not technically owned by a third party. It can't be confiscated because it's not physical, and it can't be taken by the government through some obscure law because the only law in crypto is immutable computer code. The harsh reality is that almost every other cryptocurrency does not come with these same ownership guarantees, be it due to their centralization or consensus mechanism.
He basically goes on to pitch BTC from that point on, and then his other shit. But I do find this interesting because we see this trend already happening. Yeah, owning a house is different because if the rental demand gets too high, some could get priced out and end up homeless. Yeah, but that's what we're talking about. Like, there's a big homeless problem in Barcelona, or the cost of living, right? So that's why the government in Barcelona is stealing people's houses, right? And you don't think that like the politicians want to take more control, right? To say that they're like the solution. Like the SEC is setting up their office to regulate new crypto filings, which we're going to get into in a moment here. Any who thought Tesla was a car company never understood it. I agree with that. Just like people think SpaceX is a rocket company. Correct. Damn, I wish I could buy SpaceX stock. Yes. There's a guy who has a fund that you can get in from private, but yeah, I forgot his name. Digital Farm. People forget history way too easy. Growing up, I knew the Constitution was the most important document we must protect. To the Bible. Never thought I'd see the government is more powerful. Bro, completely agree. This trend of like you're gonna own nothing and you're gonna like it kind of thing is like if you have a Netflix subscription, then you're already part of it, right? Like you're already doing it. People used to go buy movies, right? And then there was Blockbuster, or they'd go to the movies, right? And then they'd buy the VHS and they'd watch it at home, right? And then there's Blockbuster, and you could go rent a movie, right? Now they just pay Netflix every single month, right? You're already doing this. If like you don't realize it, you're already. I don't have, and I say you guys because I don't have Netflix. I don't have any of those subscription type services or cable or even own a television. But this is like, I see this just continuing to happen. I don't think this is any necessarily like crazy, one person trying to control everything. It's more people are just going to do what they believe is going to be best for them. And like, there's a lot of people that are going to do what's best for them without having foresight, right? Because you know how difficult it is for people to think more than the consequences of today, right? That's why there's so many fat fucks out there, right? Because all they do is think about the immediacy of stuffing donuts or pizza or garbage into their face today and not think about the health consequences into the future, right? There's so many people that just have an issue with this. Same thing with like people who don't have any investments, right? It doesn't take a lot to start investing. You can start investing with $5-10. Yes, it's not going to be much, but if you do that with consistency over time, just like with the consistency of the small steps in your diet or your activity level, or your relationships, all that shit gets improved over time, which is like the starting point of this, right? And one of the things the government likes to do, remember, this is like how the world works in terms of just these incremental small steps forwards. The government works the same way, right? So the government just wants to expand and grow. One way you can think about this, like expanding by incremental steps and getting better and improving and all that, is by looking at nature. What does the oak tree outside do? Just tries to grow as big as it can. It doesn't give a shit about me or you or the oak tree next to it or the grass beneath it. Just tries to get as big and as strong as it possibly can. The essence of humans or nature or whatever you want to say is to get bigger and stronger. That includes government. Right? Government is going to strive to continue to get bigger and stronger and control more. That's just what it does. And we saw this take place when the government a couple months ago tried to actually regulate software, open source software. Open source means that anybody can use it and anybody can change it. And the government is trying to regulate that. And actually going in on the lawsuit to help combat this is Coinbase. So the government sanctioned, right? We remember this, we talked about it here, Tornado Cash. And Coinbase backs the lawsuit from a financial perspective. But before we get into this, I see the chat blowing up with lots of like detailed chats. So I want to just take a gander at some of these things. In Mexico, the government cannot confiscate your home for not paying taxes. Oh, I was literally just talking to my girlfriend about buying property in Mexico. Barcelona and others are more to do with Airbnb, speculators eating up real estate and pricing out locals. Well, so the content that I consumed was saying how that if the property is not being used, nothing to do with Airbnb, they were confiscating that property, or they had the capacity to take that property if they're just not being used, right? It didn't say anything about Airbnb. The government is meant to work for the people. We gave too much control to corporations, plain and simple, and to not just the corporations, to the government. I am not anti-corp. I am anti-BS. I agree. I think the government should be a fraction of the size it is, and there should definitely be limits on the size, right? Because we've had enough history in the world to understand that anything in existence is just going to want to try to expand. That's why we don't want new government programs, right? New government programs based upon what we just said. If you put any government program in place and you call it temporary, that's just a facade, because that shit is going to expand. It's going to grow. They're going to try to expand what they're capable of doing. That's just human nature. It's how the world works. It's in nature, right? The blue whale, right? Or like the great white shark doesn't give a shit about anything else in the ocean. It's just trying to get as big as it possibly can, as most powerful as it possibly can. The grass outside is trying to grow as quickly, as big, as best it can. All these things are happening, right? It's just part of it. And if the government's in place, it's going to get bigger and bigger and bigger. That's just what it is. There needs to be very strong caps or things that require the government to get smaller, right? Like this needs to be in place. Otherwise, it leads to a road of tyranny. That's just how it plays out. There's no way of stopping this unless things start to change. Bullish. You and I did not give that power to the government or corporations. We did not consent to that. They elevated themselves through lobbying politicians and changing the laws. I agree. Something interesting that I learned this past week. Did you know that there's two different types of ownership for your property? So like you don't really own your property. Like, so this, even though I have the title, that doesn't mean I own it. There's a simple deed. And then there's another type of deed, which is, I don't know what the name of it is. I think it starts with an A, but the type of deed that is actually means that you own the property. Like this, I don't own the property. Even if you don't have a loan on your property and you have a simple deed, you do not own the property, right? Are you getting electric? Are you getting sewer? Are you getting water? All of these things are indicated that you don't get it. So effectively, this other type of deed allows you to take your property off grid and you own that property. I wish I had the name of it, but I don't know. If anybody has more of a legal background or understanding of that, let me know what it is. Par excellence is scary. We even had facial recognition here where companies started storing people's face print on entry, but it got banned, thankfully. Par excellence, where are you? Hong Kong, and facial recognition. Just had some riots going on. Just like I just saw this a couple days ago, where they were knocking down and cutting out the facial recognition tracking that is taking place in Hong Kong. And I saw a video on TikTok on this. So it's funny that you say this, because this is not just like a United States type thing. This is happening like all over the place. I don't think they're possible with a private company. That's Mark Gillis. I don't think that was possible with a private company property. Is that similar to torrenting? I'm not sure what he's talking about. There's a big difference between being forced to lease everything and choose to do so. All of you pretending otherwise are part of the problem. The people, the vast majority of the population of the world is going to choose this, Taryn. They're not going to they're going to choose to do this, right? They're just because it's there's going to be a better option for them. Like I own a Tesla. Nothing to do with this, because it's a far better option, right? It's way better than, say, a BMW, Mercedes, or Audi. Like it's just 1,000 times better. And people are going to do this because it's going to start out slow, just like it does with everything. Like Larry O mentioned at the beginning of the show, these incremental steps over time are just going to continue to expand. It's going to get better and better and better. Look at Amazon Prime, right? They're going to continue to add value to Amazon Prime to get more people to be sticky with it, right? The iPhone 14 came out with eSIM, right? I looked at this patent 5 or 6 years ago before they started utilizing it, but they have an eSIM. So that means like on this one, I own a Pixel too. I saw it. Bullish said he owns Pixels. This Pixel, right? I have a SIM card slot on the side where you push in a little thing, the tray comes out, right? Well, in eSIM, there's going to be no port on the side, right? Well, then you're like, okay, well, that's interesting. That's cool, right? Because then it's less for damage, it's less for water. That you don't have to build that frame in the same way, so there's more space for battery and other things in the phone to make it better. But then, and it seems to work pretty well so far. But then, what happens if you want to switch from Apple, right? Is that like going to be an issue, right? I don't know, right? Because I don't see I understand Apple's ahead of everybody else from their software and hardware standpoint, but that is not necessarily going to, like, it's going to be more that walled garden, so to speak, to hold people in potentially is how I might think about it. Full ownership of property means land and air rights in simple terms. But there's a little bit more to that too. If I can find, I'm reading through this book on trusts, and they were going through and actually explaining that. There's a big difference between, okay, we looked at that one. Let's see here. Chris, they've been doing that. The Hong Kong protesters put the American protesters to shame. In which way? It was Kmart and Bunnings hardware store in Australia storing face prints. Wow. Oh, wow. I didn't know you were in Australia. That's crazy. Good morning, Monica. Good morning. Hope you're doing well. Okay, so let's get into this article real quick. Thank you for all the feedback. And then after we get into this really quick, then we're going to listen to some, there was an interview on CNBC with Sam Bankman, the guy behind FTX, right, who made all of his money with arbitraging BTC and ETH from different places. But this article just came out, I think, today, the 8th. Sorry, 2 days ago. Coinbase backs lawsuit against U.S. Treasury. Sanctions on open source technology may have a chilling effect on innovation. This is Coinbase CEO Brian Armstrong said. Remember that somebody took some, we'll call it sanctioned ETH, and they sent a tiny little bit to Brian Armstrong's wallet. That means any USDC in his wallet, because USDC is a US company, right, or entity, that he can't spend any of that, and it's all frozen, all of his USDC that was in that wallet. And this could be why this is taking place. But the Treasury sanctioned cryptocurrency Mixer, which, if you look into the details on this, we might refer to it as a mixer, but your coins are not actually ever mixed. They're not. If you and I are both, if there's 10 of us using it, my coins are never mixed with your coins. In actuality, if you look at the smart contract, somebody did a breakdown on Twitter, which was interesting. Tornado Cash for facilitating money laundering of more than $7 billion worth of digital currencies. Why don't they sanction the United States dollar, right? Because that's where most of the money laundering happens right now. 6 plaintiffs have filed suit against the Treasury Office of Foreign Asset Control, OFAC, right? Centralized cryptocurrency exchange Coinbase is funding, they're paying for this, a lawsuit filed against the U.S. Treasury Department, OFAC, by 6 people affected by the Tornado Cash sanctions. The lawsuit asks the court to remove Tornado Cash from the U.S. sanctions list. Currently, it is illegal for any U.S. person to interact with the app, calling the move unprecedented, overboard action that oversteps the government's authority. That the suit argues the Treasury stance infringes upon plaintiffs' constitutional right, threatens the ability of law-abiding Americans to engage freely and privately in financial transactions. Completely agree with that. There's also a watchdog group that is suing suing the Treasury Department as well in regards to this. Cryptocurrency mixers such as Tornado Cash allows users to privately deposit assets from a crypto address and withdraw them using a different address. The Treasury says that DPRK, state-sponsored cyber hacking group, has used Tornado Cash to launder more than $7 billion worth of digital currencies. These sanctions represent a significant unauthorized expansion of OVAC's authority. What did I just tell you? That if any government organization or quasi-government organization is going to just literally want to expand their power and control, which have directly harmed innocent people seeking to legitimately protect their privacy and security using this technology. Why don't we know where the $40 billion that got sent to Ukraine as a bribe? Why can't we track that? Yeah. Why is this so hypocritical, right? That you are not allowed to have private financial transactions, but the government's able to pay bribes to people in the Ukraine and all else around the world, right? That can then funnel back into some portion of it into the pockets of the scum in our government. Paul Grewal, chief legal officer at Coinbase, said in a statement, "No one wants criminals to use crypto protocols, but blocking the technology entirely, which is what this sanction essentially does, is not what the people's elected representatives authorized, especially when there are effective routes to more narrowly target bad actors." One way to think about this, the lawsuit argues that many users turn to mixers like this to do them for like legitimate things, right? One way to think about this is like the bad guys who steal shit drive on roads, right? That's an open source technology, right? Similar to Tornado Cash. Well, because bad guys drive on roads, we need to sanction roads. You're not allowed to drive on roads. How fucking idiotic is that? That's effectively what this is. It's so silly and so stupid, right? Like completely asinine. Don't forget, we have the SEC story coming up as well, which we're going to get into. But before we get into the SEC story, I wanted to just hear, this is a short video in regards to the merge and Sam Backman's point on this. Some interesting thoughts on this and
both
the
of you a
fork.
different question, which is this goes to, you mentioned Ethereum earlier. ETH, we have this big merge coming, which is going to effectively go from a proof of stake to a proof of work to a proof of stake situation. There are risks involved in this. And so the question is this a catalyst that takes this and takes it to another place in terms of how fast it grows? Or is this you think a big risk to the entire valuation of it?
Well, I want to yield that to Sam because he's obviously, closer to the situation than me. I like the merge personally, but let's yield that to Sam because he just.
Sam, what do you think?
Yeah, I mean, I think long term it's probably going to be, exciting for the Ethereum community. I think it's going to allow substantially faster and cheaper processing of transactions for Ethereum. I think that sort of was one of the big emphasis for it in the first place. I do think that it's going to be, as all big transitions are, a little bit rocky at the beginning. I think that there's going to be some messy activity around when it happens. I think that's sort of inevitable, but long term and probably even medium term, I think it's probably going to be healthy and exciting.
When you say messy, what do you mean?
I think that first of all, there are going to be some forks of this, right? Pretty likely, as you look at, some people who want a proof of work variant on it. Although, I think everyone is expecting that the bulk of the activity is going to transition, to the proof of stake, Ethereum through this merge. Obviously, there's going to be a lot of people in the ecosystem who have to update software, who have to start processing the new chain. Many of those are going to be promptly ready to do it. Some of those probably are not. I expect that APIs are going to break in ways people didn't quite predict. And there's going to have to be bug fixes released on centralized entities that are trying to consume a decentralized blockchain and fail to realize that the merge has happened. I think you have protocols having, to have developers learn some new things. I don't think it's going to be, a huge deal medium term, But it's a big transition, and anytime that happens, especially when it's not just one company doing, when it's an entire decentralized ecosystem and all the decentralized and centralized entities in it trying to transition all at once, some people are going to flub the transition and take some time to clean it up.
People have called it the Y2K of crypto. The question is, remember,
I think that's going to present opportunities, right? The people who fuck shit up are going to cause, that's going to cause more volatility, right? And that's going to present some buying opportunities for good DCAs in there. But let's finish this.
everybody was worried about Y2K, and then in fact, it seemed to work out just fine.
Well, listen, I mean, go ahead, Sam, sorry.
Oh, as you say, I think it'll work out just fine for most places, but I think there's going to be some mess around the edges.
What were you going to say?
No, I was just going to say that you're talking about Y2K. Let's go back to 1998 Web 1. It would take 35 seconds to get your landing page on AOL. Now look at us. Billions of people are streaming. We're so early in the space that whatever glitches that happen 5 years from now, people are going to be very happy that they were in a selection of these cryptocurrencies.
Hey, Sam, before we go, given that you've been now making investments in lots of different businesses.
Yeah, so I found that was interesting. If you guys caught that, he did mention the fork, right? So Ethereum proof of work is going to be its own chain, it looks like. And Ethereum proof of stake is going to be its own chain. That means you'll get copies of all your shit over there. And I personally think, just similar to like Ethereum Classic, I'm super curious to see how this plays out, right? Like I have Ethereum ERC20s. I'm going to keep you guys posted. If I can get free copies of all my shit, even if it's 20 cents on the dollar, I will share with you on how to go claim your shit, how all this is going to work, because we're getting kind of like a preview of what PulseChain is going to be with just less marketing around it, right? So this is going to be, this community is probably going to be the community that actually takes advantage of this more so than anybody else. DCC had a clip. I don't actually know who DCC is, but I know people talk about this person. Had a clip talking about ETHW yesterday.
Dollar cost crypto.
Dollar cost crypto. That's the person that GRC talks about.
Right. And that's the guy who set up all the stuff in Miami and stuff like that with Richard Heart.
Oh, okay. So I was the first person to bring it up. I'm just going to put that out there before anybody else in this community was talking about it, but you should be able to get free shit from this. But that wasn't the last thing. The last thing that we want to cover in today's show is related to the SEC. Remember, the theme has been evolution, right? The idea of creating a government agency. The government agency wants to expand. Why do they want their fingers in crypto? So that they can have power and control. Well, I think it was yesterday, Yahoo News released this article here. This is from Reuters, but it's just shows up on the Yahoo Finance. U.S. SEC to set up new office for crypto filings. What the F does that mean, right? You're not filing, right? Are you going to file prospectus like you do a white paper? The U.S. securities regulator will set up 2 new offices to deal with filings related to crypto assets and the life sciences sector, the agency said on Friday. The Office of Crypto Assets and the Office of Industrial Application and Services will join 7 existing offices under the SEC department, which handles corporate disclosure filings. So white paper, I've said this before, there's a lot of people who have white papers, and these white papers can be thought of as like a prospectus, right? If you're in the legacy world, if you want to raise money from investors that are not like accredited investors, having a prospectus is something that you legally need to actually do, right? As a result, that's what they might require here, right? So what do you think that's going to do? It's just to be like, oh, bro, let's move out of the country. That's literally what I would do. As a result of recent growth in the crypto assets and life sciences industry. Hey, guys, anybody know what this means when they say life sciences? Life sciences industry, we saw a need to provide greater and more specialized support. Renee Jones, director of division of corporate blah, 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 said. Cryptocurrencies and other digital assets have soared in popularity over recent years and are getting increasingly intertwined with the regulated financial system, saddling policymakers with monitoring risk in a large unregulated sector. 2022 has seen a sharp drop in crypto demand, though. Global risk sentiment has walloped by the Ukraine crisis, aggressive monetary policy, and decades high inflation. So actually on this, as a little bit of a preview for tomorrow's show, allegations of money laundering against some crypto firms, as well as consumer protection violations in the United States, the biggest market for digital assets. Okay, so in regards to the high inflation, if you've never heard of Cathie Wood, she was the one of, there was very few people who were talking about Tesla when I used to talk about Tesla back in the day, before anybody actually understood Tesla, right? And Cathie Wood was interviewed, which we'll be watching tomorrow, and she has an interesting take on inflation, right? And similar to my take, where I mentioned this on the show a couple months ago, that we've seen the dollar gaining value relative to a basket of currencies, whether that's the Chinese currency, the yuan, the yen of the Japanese, the Australian dollar, Canadian dollar, the pound, the euro, right? The United States dollar is gaining relative to all these things. And there's also some other things related to inventory. I just literally this morning saw this before I found the thing from Cathie Wood relating to Amazon seller concerns around the holiday season and how they believe that it could be a weak season. We could find some really, if you like to shop for holidays, I don't really celebrate holidays and shit, but if that's your thing and you buy a lot of shit around the holidays, there could be some really good deals because there's an inventory ramp. Like the amount of inventory in companies' balance sheets and stuff has been growing. So we're going to get into that tomorrow. Let's touch base with some of these comments before we wrap things up here. UFO, still trying to work out a Hedron dilemma. Swap liquid HEX for Hedron or make a 555 HSI and borrow all Hedron. What is the best yield? That is a awesome question, which we should probably get into in a different show. But swap your HEX for Hedron or make a 555 HSI and borrow all Hedron. Well, so one thing I can say about this, the highest yield could potentially be right at the moment with Icosa seems to be earning a higher yield than HEX is, right? So taking the HSI and borrowing all your Hedron, you can do this in a risk-free way to use leverage risk-free, which is not like something that's super common, but you could take your HSI, you can make like one payment, or two payments or something. So you have 5 months, or make 3 payments, right, from that. So you have 6 months. Then you take the remainder of the Hedron over to Icosa, and you can stake that in Icosa. And during the next 6 months, you don't have any payments to make to pay off the debt for your HSI. So you're earning yield on your HSI from HEX, and you're earning yield in Icosa. Now, in 6 months, when this becomes due, right, when you have a payment due, you make your Icosa stake for 179 days. That comes due, and you effectively get free Icosa because you take your Hedron out of Icosa, you bring that over to your HSI, you pay off your HSI, and you can repeat the process. So you pay off the whole thing, then you borrow against it again, pay for 3 months in advance, take that, put it into Icosa, stake that out for 179 days, but you can build your Icosa while earning HEX yield at the same time there. Now, the other way could be to get the HSI, convert it to Icosa and just stake Icosa there. I haven't run the numbers on that to actually, see what might be better. Thank you, Bullish. Technology, biotechnology, pharmaceutical industry life. Interesting. So this is what that article was talking about. Cathie Wood, lost big on Coinbase. She sold a lot of her position actually once they had the lawsuit there. I'm thinking about converting my ERC20s on the POW fork to like ETHW and wait for a bridge to be deemed safe to cash out and buy HEX Hedron or ETH POS. Okay, so I should do a deeper dive on this to look into. There is a bridge out there. Bullish actually was able to find a bridge the other day that is from, I think, the testnet for POW to proof of stake. So that'll be interesting, right? I like that strategy there, par excellence. Unsuitable, because when you think about it, most of the ERC's 20s, like Hex and all everything over there, will probably have fucking very little value, in my opinion. Could be different, right? But I think it's gonna have very little value. So you might have to try to convert them to ETH-W and then go from there. Could be wrong, right? Maybe this community I see is like the best equipped to handle this fork, because we've been thinking about it. Unsuitable. Passively heard that HSI mints more Hedron than the native Hex state. Did I hear that wrong? No, that is correct. Currently, that's exactly true. And the first year of ICOSA yield is more than likely going to be higher than the second year and subsequent years, because they have the backlog. It's based on Hedron burn. A bunch of Hedron has already been burnt, and that Hedron that was burnt yields this much ICOSA. That much ICOSA is spread out through the next 360 days from the ICOSA launch. So ICOSA has a very strong yield right now, and should be a very strong yield for the first year. I don't have very much confidence for liquidity for ERC20s on POW. I agree with that, Chris. I just don't think there's going to be a lot of liquidity over there. You're welcome, sir. AJ, HSI, stake HSI, tokenize, do the buyback at ICOSA and stake it. That's one way to do it. Yes. So hope you guys found some value in today's show. If you did, make sure you press the share button, even if you don't actually want to share it. But if you do, that would be helpful. Share it out to Twitter, tag me. Just pressing that button is helpful. And we're going to take us out with some DeFi proof. Don't forget to subscribe to the new channel, right? We have the CITM Crypto in the Morning YouTube show specifically. So make sure you subscribe to that channel as well. We will continue to promote that over the next couple of weeks so everybody can find it. All of the old episodes are already listed up there. We will also be doing the Crypto Fitness Challenge winners when GRC gets back within that week or something like that. So looking forward to that. We got a lot of good stuff planned. We have inflation talk tomorrow. Appreciate you guys, and I'm gonna get out of here with some DeFi proof. Peace.
Farming with my stables in the decks. I'm holding IRA and it reflects. I'm sticking all this shit on Everest. And I'm balling ECF. Farming with my stables in the decks. I'm holding IRA and it reflects. I'm sticking all this shit on Everest. You see, the problem was these epochs. Now I'm printing daily, man, who need that? I check my APR on VFAT. And the regulation printing big stacks. I simple swapped it for some BNB. Took my shares and I made OP.